Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 15th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to remain at these highs right now, and you'll see right here that we've had a pretty narrow range here over the last 4 to 5 sessions. 1, 2, 3, 4 days right here is locked in as being super narrow. Today, right now, at least in pre-market trading here, we have an inside day so far with a very small range here, just 30% of average range. If we double-click this indicator down here, the PivotBoss Advanced ADR indicator, I can increase this to 5 days there, and what you see is a very compressed phase right there. And when you get that kind of compression, there tends to be another wave of volatility and increased price range that follows. So we'll see if we get more range-bound type of price action today. Doesn't necessarily have to stay inside yesterday's range. It can drop all the way as deep as 3260, and it can still be a narrow 5-day range. Remember, the range is measuring the highest high of the 5-day period and the lowest low of the 5-day period. So that's the range right there, and it's still super compressed. And again, soon we could see some sort of expansion, and it could look like this here, right? We were talking about how narrow this range was. This was a failed breakdown followed by an outside up, and then it pushed higher. Again, if it were to drop down pretty hard here and reject in the trigger zone, it could be a continuation pattern. So right now, it's mostly about waiting and seeing. We have still a very clear upward trajectory in this trend. However, if we do break down, it could be a clear and quick reversion to the mean type of trade where we drop back toward the previous month's close. Maybe in the biggest pullback sense, we get lower, maybe into the previous month's mid. But we'll see how this develops here. Again, very hard to bet against this thing not just breaking to the upside, as has been the case. All right, let's take a look here at the NQ. You'll see with the NQ, very similar price action. The range also very narrow here, 5-day range. 63% of ADR at the moment. So really it has to stay below that high and stay above this low in order for that 5-day narrow range to be cemented for the next session. So again, that may or may not happen, but right now we are seeing early signs of a failed low developing here where price pushed below the previous session's low and is rejecting it to a degree here. If it stays above that zone and can recover back above the previous session's midpoint, it starts to turn into a pretty bullish day. So overall, something like this here where it rejects the low and pushes higher to close above the previous session's day, it would be an uptrend. So again, very narrow range here. We'll see how this plays out the rest of the session. If we complete the day looking like this, it could be a very nice breakout to come with increased range and volatility soon. All right, let's take a look here at crude oil now. Crude oil has a range of 52 ticks today. 52 ticks. That is 26% of average range. Over the last 5 days, which are these days here, there is a compression of the range, even though it's really the last 3 good days where it's kind of significantly compressed in that range. This is a difficult one. Again, we had a major rejection here on this day, and it just kept on going the rest of the session. We knew that we might get some kind of quieter type of range-based action followed by what could be a continuation toward 54 and then down maybe toward 50 to 52. Those are the next major targets to the downside. I've mentioned before, if we do bounce and failed high of some sort, that could be a great selling opportunity. Even if we bounce as high as 60, it could be a great opportunity to sell this thing. So any strength here could be seen with an eye toward selling the rip. At the moment, we have a very strong high. If we find a strong low of some sort, perhaps there's a good midpoint retest coming as well. So we'll see how this develops right now. Very narrow 3-day range. We've been watching the 60-minute time frame for crude oil, and it's giving pretty good levels for that range there. 59 on top, about 57.5 on bottom. And again, we could continue to see a little bit of range-bound action in there, but soon expansion could lead to a very nice move. So keep an eye on that one. The next one here is gold. And you'll see with gold, we have compression as well. This 5-day range right here also compressed. So after a pretty active week last week with one of the biggest days we've seen in a very long time, we followed it up here over the last 5 days with very quiet price action. Another 5-day narrow range, 41.5% of average. Again, what tends to follow after that is some sort of increased range. Do we get back to 80 to 100 points of range up ahead? Perhaps so. Again, we'll see. One thing that is a little concerning right now for gold bulls is the fact that price is held inside this trigger zone, the bullish trigger zone, 5 days running now and hasn't been able to get any lift. And so that starts to suggest that maybe if those bulls don't get paid, then an exodus might occur. The other thing to keep in mind is these are recent highs right here. And you'll notice right there that we've rejected those highs pretty good. And we are now staying below those recent highs. So it tells us that 1565 is probably the most important level here. If price gets up to 1565 and can't get through it, that might be the optimum sell for a push back toward the other side of the range, 1460 to 1440, which includes an FOMC key level, which is still a naked level, and also includes the 200-day average. So 1565, very, very important in gold. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.